If you watched last night with Brian Wong, you'll know that we need to open above 427 this morning, and then we need to stay above 427 for the first hour, and then we're going to go to 430 and 440. 440 being the operative number. And then from there, after we crash through 440, we go all the way to all-time highs and maybe even beyond that. So far, so good. We opened above 427. We're still above 427 at 7:20 California time. And so at the end of the show, we'll take another check and see if we managed to hold it for an hour. Now, there was another technical analyst this morning that's saying that we just need to close today, close at the end of the day above 430, and then Brian Wong's vision will be also true. So that is also kind of my technical read. And you know, I'm not a technical analyst, but I also have done really, really well when I was day trading, extremely well. So that's kind of how I'm seeing it right now, roughly speaking. I see 410 now being a very solid floor. We've tested it twice, and it bounced off of 410 quite nicely. That's how I reported it a week ago. That's what I said I thought would happen, and it did. I continue to say, hey, we could go down. You never know. Okay. We've got lots of news. We should probably get into all this news. We got some crazy news. We got the market really absolutely confused about what to do about all this news. We've got the economy looking stronger for the most part, with most of the news this morning, which is causing bonds to go up, interest rates to go up, yields to go up. And yet we've got the stock market saying, well, I don't know, it doesn't seem as good as all that. Anyway, it's all over the place today, but let's go ahead and take a look. So let's start with this. The Uber president, I don't even try his name anymore. He tried to make his case last night on the All In podcast. His case that he wanted to make was, well, Herbert Ong copied it down this way. Uber CEO Dara Khosrowshahi, anyway, made this pitch. If you want to maximize revenue today, Mr. Elon Musk and Tesla, Uber is your ticket. The market's big enough for multiple winners. We would love to partner. So we'll see what happens with that. We now have the partnership on the trucks. Maybe that is the beginning of something bigger. I think it will be. I think whether it's a formal partnership or whether it's just Uber providing a way for their independent owners to purchase Teslas and be on their network. As I mentioned yesterday, I think that's going to happen. All right. Investing.com. Goldman Sachs has raised its price target for Tesla to $395 from $300 while maintaining a neutral rating on the stock. Tesla currently trades at 427 or 428 this morning. And so Investing Pro data showing the stock traded at a PE ratio of 251 and suggesting that it's overvalued relative to its fair value. The price target increases reflects higher market multiples generally, Tesla's long-term growth potential, and Goldman's increased forward earnings estimate for the electric vehicle maker. The stock has shown remarkable momentum, gaining 15.47 in the past week and maintaining a market capitalization of $1.42 trillion. Goldman Sachs identifies three key focus areas for investors following the stock's recent rise. Tesla's progress with autonomy and robo-taxis, particularly removing human safety observers. That's what they want to see. That's their key. That's going to be their key, is removing those safety observers. Yeah, that'd be one thing. I'd like to see a lot more cars out there. Development of the Optimus 3 robot with its year-end prototype target, and profit margins amid changing IRA credits and tariffs. What are those going to look like in the fourth quarter? That'll be interesting. They don't say that. That's me saying that. We know the third quarter is going to have strong profit margins. Will the fourth quarter also have strong profit margins? You know what I feel on that. I feel that the fourth quarter will probably still have strong profit margins because of the way the IRS has told us that we can buy cars right up to the last minute. So we should see some benefit from that in the fourth quarter. After that, I think it's going to have to do with unsupervised. Do we get unsupervised? That's going to be the key. Tesla's current gross profit margin stands at 17.48, which is very strong, with 20 additional insights available to insiders if you have a subscription to the system, to Goldman's program. The investment bank projects Tesla's 23 earnings per share range could be approximately $2 to $3. Approximately per share could range, earnings per share could range from approximately $2 to $3 to $20 a share, with a middle scenario suggesting 7 to 9 EPS at a compound annual growth rate of 40 to 50%. Goldman knows potential upside in its price target if Tesla achieves significant market share in humanoid robotics and autonomy, while warning of possible downturn if the competition limits profits or if Tesla faces execution challenges. Well, that would almost always be true for every company. All right, multiple sources last night were saying that there's this Farm Agri had reportedly signed a letter of intent with Tesla to bring up to 10,000 Optimus robots into its work. It has a website. It's showing Tesla Optimi working in their fields and their factories and their labs. All fake, 100% fake. Nothing to, Elon Musk says this morning, fake news, nothing to it. Now, these guys could send a letter of intent to Tesla all day long saying, we want to buy 10,000 of your bots. I could send Tesla a letter tomorrow saying, I want to buy 10,000 or 1 or 100 bots. It has nothing to do with anything. It looks to me like maybe Agri, or what is the name again? Farm Agri was looking for they were either looking for a little bit of promotional, a PR campaign thing going there, or maybe they were trying to pump the stock. I don't know. But anyway, we can pass on that one. That one is not true. All right. So yesterday I mentioned, oh, yeah, yeah. Wait a minute. All right. Think about this. I want you to think about this. Elon Musk can drop by the Optimus lab at any time he likes. He can just run in 3 or 4 times a day if he wants. Pick up the phone, talk to guys in the Optimus lab. I can't do that. Can you do that? He knows every actuator on that bot. He knows every part of the circuit board. He's involved in stand-up meetings all the time about whether to make the little finger longer, how many million times the elbow has got to bend before it's going to be okay for production. He knows all this stuff. He knows all of it. I don't know all of it. Do you know all of it? He can also jump in any of the vehicles at any time, take a ride, take it on a difficult path, someplace, take it on a hard road, see how FSD is doing. So I don't know that. I can't do the stuff that Elon can do. I don't have that inside knowledge. So when Elon puts up $1 billion to buy more stock, he knows more about the decision than any other person in the known universe. So yesterday, I mentioned that the top pros don't understand Tesla anywhere close to the way you and I do. So we've got 3 levels here. We got Elon Musk. He knows more about it than any of us, and he just bought $1 billion worth. Then you got you and me. We really study it, and I study it maybe more than you because I work on it 10, 11, 12 hours a day. Do you work on it that much? I don't know. But I try to bring you I try to sift that down and give you the stuff that I think is the most important. And then we've got the analysts on the street. I'm talking about Goldman analysts and Dan Ives but then also, other analysts that don't study it nearly as much as Dan. And then there's other, Motley Fool. We'll talk about that in a second. So what I was saying to you, what I'm trying to get across is, and I'm sorry, I'm disagreeing with Nicholas Gibbs here a little bit, is that no, the street doesn't know squat. I really believe that. They're really stupid. It's not that they're stupid in general, it's that they don't have the time to analyze every single stock the way that you or I can. So we know more. We have an information arbitrage advantage. So anyway, the Motley Fool has some great analysts, and they dig in more than probably most of these analysts on the street. And they should know more about stuff than even you and I do, but I'm saying they don't. So here's So they do a decent job this morning in an article describing the business. And then they say that the prospects for Tesla a year from now come down to this. Stepping back, the most useful way, this is quote, stepping back, the most useful way to frame the next year is as a spectrum. At the high end, a scaled autonomous network of robotaxis, they're saying, plus strong vehicle orders could send earnings and the stock slightly higher or sharply higher even. In the middle, modest autonomy progress and a return to moderate growth in vehicle sales could keep shares range bound and profits recovering gradually. But then at the low end, a limited autonomy progress and lingering weak demand on the cars could leave margins thin and the stock vulnerable. That is precisely why Tesla remains a speculative bet, best suited for investors with a large risk appetite. The upside is massive if autonomy works, and the downside is meaningful if it does not. Well, you know what? In that entire article, there was not one word about Optimus. Not one word, not a single word. There wasn't a single thing about the embedded real world AI that is happening at Cortex. Or overall, we are by far the leaders in that category. These two are worth more than the rest of the company combined, but most of the street really doesn't even get Robotaxi, much less the value of Cortex or Optimus, and I think that proves it. Okay, this was from Teslarati. Panasonic is developing a new high-capacity EV battery that could potentially extend the range of the Tesla Model Y by 90 miles. The Japanese company, one of Tesla's key battery suppliers, is pursuing an anode-free design that it says could deliver a world-leading level of capacity by the end of 2027. That's like right around the corner. Panasonic's anode-free design, the technology Panasonic is pursuing, would eliminate the anode during the manufacturing process, as noted in Reuters' report. By freeing up space for more active cathode materials such as nickel, cobalt, and aluminum, the Japanese company expects a 25% increase in capacity without expanding battery size. That would allow Tesla's Model Y to gain an estimated 140 kilometers or 90 miles of additional range if equipped with a battery that matches its current pack size. At the same time, Panasonic could use smaller, lighter batteries to achieve the Model Y's current range, or we could use the same size batteries with a smaller pack. Panasonic also aims to reduce reliance on nickel, which remains one of the more costly raw materials. A senior executive previewed the initiative to reporters ahead of a scheduled presentation by Panasonic's energy technology chief, Shoichiro Watanabe. Tesla implications. The breakthrough, if achieved, could strengthen Panasonic's position as Tesla's longest-standing battery partner at a time when the automaker is preparing to enter an era of extreme scale driven by high-volume products like the Cybertruck and Optimus. Elon Musk. See, now Teslarati understands Tesla better than probably any other what do you want to call it, publisher out there. Elon Musk has stated that products like Optimus would be manufactured at a very high scale, so it would likely be an all hands on deck situation for the company's suppliers. Panasonic didn't share details on production costs or how quickly the new batteries might scale for commercial applications. That being said, the Japanese supplier has long been a partner of Tesla, so it makes sense for the company to also push for the next generation of battery innovation while the EV maker pursues even more lofty ambitions. This is Randy Kirk. You know what to do. And later today, it is Thursday, so you will have what a lineup. Yeah, it's Bradford Ferguson, followed by Cern Basher. You bet. It's going to be a good one. Rod D. Martin. I follow Rod D. Martin. I pay attention to Rod D. Martin. Says he has this morning. Likely the next Fed chairman will be Kevin Hassett. He says Kevin Hassett is quoted as saying, "We are in a supply side boom, and the naysayers are proven wrong yet again." Someday we'll explain what a supply side boom means if you don't already know. It means we're creating a lot of supply ahead of demand. The Fed absolutely should cut. This is number two. The Fed absolutely should cut. They're preventing economic growth and job creation, an economy with no real inflation. That's 100% true. Number three, the nature of the boom is disinflationary, and the U.S. is on track for 4% GDP growth. Let that sink in. 4% GDP growth. In fact, we might be near there now. All indications would be that we could be at 4% in the fourth quarter, if not certainly by the first quarter. He doesn't say it in the clip, but if that last bit is true, we won't just eliminate the deficit, we'll start meaningfully paying down the national debt. Wait a minute. We won't eliminate, we'll eliminate the deficit and start paying down the national debt if we keep these tariff monies coming in and we get to over 4% productivity. I like that. You know that completely fits my analysis. In the week ending September 13th, the advanced figure for seasonally adjusted initial claims was 231,000. 231,000? A decrease of 33,000 from the previous week's revised level. And the previous week's level was revised up by 1,000 from 263 to 264,000. And the 4-week moving average was 240,000, a decrease of 750. Wait. The total number of continued weeks claimed for benefits in all programs was 1.834 million, a decrease of 90,000 in the continued weeks, meaning people are finding jobs. Well, okay. MarketWatch says this about those numbers. The surge in jobless claims in early September to a 4-year high turns out to have been a false alarm, at least for now. The number of people who applied for unemployment benefits in the 7 days ending September 13th subsided to 231 from a revised 264. So the 264 number that they just came out with this morning has already been revised down by, that was last week's, been revised by a huge amount, the government said Thursday. The jump in new claims 2 weeks ago was driven by a doubling in unemployment applications in Texas that turned out to be fraudulent filings. Now, I'm not a stats. I took statistics. I understand statistics. I've worked with statistics my entire life. However, I'm not a stats professional. But when you're doing any kind of data gathering and you're going to publish your results and you get something like a doubling in one area compared to the previous week, put an asterisk on it. Jeez. Or double check it. Our actual new claims, raw claims, drop below 200,000. This is without seasonal adjustment. Raw claims drop below 200,000 for the 7th time in the past 8 weeks, an extreme low number by historical standards. Well, guess what? The bond market didn't like this report. The bond market said, the economy's hotter than we thought. Oh my gosh, the jobs are better than we thought. Therefore, maybe the Fed won't do the second cut. So bonds are up this morning. Bond yields are up this morning. Next, we have manufacturing activity in the Philadelphia region. According to firms responding, the survey's indication for general activity, new orders, and shipments all rose. That was after getting good news out of New York the other day. The employment index remained mostly unchanged, continued to reflect overall increases in employment. Both price indexes moderated, but remained a little elevated. The survey's future indicators suggested widespread expectations for growth over the next 6 months. Current indicators improved. The diffusion index for current general activity rose 24 points, its highest reading since January. Almost 40% of the firms reported increase in general activity this month, up from 30% last month, while only 17% reported decreases. Last month it was 30%. 43% reported no change at all. The new order index rose 14 points to 12.4 this month, and shipments index rose 22 points. On balance, the firms continue to report overall increases in employment, and the employment index was little changed at 5.6. Almost 16% of the firms reported increases, while 10% reported decreases. The average work week rose 10 points. The prices paid index fell 20 points to 46.8, down notably from the multi-year high. Nearly 49% of the firms reported increases in input prices, input prices, and 48% of the firms reported no change. And then the current prices that they're charging fell 17 points, almost 20%, reported increase in what they're charging, but 78% said they're not changing squat. Sounds like a good economy to me. But the Conference Board of Leading Economic Indicators, which I keep saying apparently is, I don't know, reporting on a different country, they said the leading indicators for the US declined by zero point 0.5 in August to 98.4 after a small 0.1% increase in July from an originally reported 0.1% decline. So their 1.1% decline last month, they now have is at a 1.1% increase back in July. The LEI fell by 2.8 over the 6 months between February and August, indicating that they're the only one saying such a thing. Says we've got the GDP up by over 1.5 and now increasing more than that. February and August 2025, a faster rate of decline than the 0.9% contraction over the previous 6 month period. I don't even know why we look at this anymore. Quote, in August, the U.S. LEI registered the largest monthly decline since April, signaling more headwinds ahead, according to Justiana Zabinska-Lamonica, senior manager, business cycle indicators at the Conference Board. Among its components, only stock prices and leading credit index supported the LEI in August and over the past 6 months. Meanwhile, the contribution of the yield spread turned slightly negative for the first time since April. Besides persistently weak manufacturing, new orders, and consumer expectation indicators, labor market developments also weighed on the index. So overall, we've got the Conference Board saying not so great. All right, where are we this morning? We've got the Truflation saying that we're at 2.26 on the overnights, 1.73 year over year, PCE equivalent 2.64 overnight, all trending slightly up from yesterday and over the last week or so. The POTUS this morning is at 51%, third day in a row, whereas overnights have been at 52 or higher. You already know what I think about that. The GDP report was from Atlanta Fed, dropped down back to 3.3, down to 1.1% from 3.4 to 3.3 because of the housing numbers that came in yesterday. That is one of the three parts of the economy that still needs help. Well, okay, so that all seems really, really good. What is it doing? And did Tesla, we're now at 7:42 California time. Did Tesla stay above? Yes, Tesla stayed above 427. So we are going to go higher. We're sitting at 428.85. That's up 0.7%. The Dow Jones is up 0.54. The NASDAQ is up 1.1. The S&P is up 0.72. This puts this S&P now at 6,648. Yeah, okay. We got the Magnificent Seven all up. In particular, NVIDIA, they ended up placing a big order with oh, I'm forgetting the duck on it. That other chip company that is in trouble. What's their name? You know who I'm talking about. Anyway, sorry, just gone. But overall, Magnificent Seven looking great this morning. The VIX popped up a little bit, but it's still at 1544, which is solid. We got the Cathie Woods all higher, but that's off of yesterday. Cathie Woods did not do well yesterday, so they're kind of bouncing back today. Now, you'd think with all of that great activity, well, you know what all that great activity is telling you? It's all telling you the golden age is coming. Everybody sees it. Everybody knows it's going to happen, except for the left-wing press. Everything's going great with the economy. It's going to be amazing. Tariffs are not impacting. I mean, everything is really coming up roses. So what do we got? What does the bond say? Bond market is actually saying the same thing. They're saying, you know what? This is really good. Business is booming. And so we're gonna increase our yield again, 5.2 basis points back up to 4.13. This is not a happy thing. This is not good. Okay, that means what's happening? Oil is up a little bit. We're back up to $64. $64.29. That is up 0.37 this morning. Natural gas, though, down 3.81, back under $3 to $2.98. We got gold falling dramatically this morning. Well, okay, it's 1.28%, but it's down to 3,670. Silver also down 0.51 at 41.93, and copper down 1.21. that after going up almost 460, now back around that 450 again, 453. All right, we got the dollar mix this morning. We got Bitcoin up 2,000. That is 1.8% in the 117,800 range. That would tell me that we might be looking at another run on an all-time high on Bitcoin. Ether is up 2.07 this morning at 4,600. And there you go. Intel, that was the name of the company. Yeah, Intel is surging 30% this morning after NVIDIA says it will invest $5 billion in the chip maker. So yes, that's probably why NVIDIA is up this morning. I think maybe that's not it, but it could be. All right, let's see here. Let's go ahead. Yeah, what else do I have to do this morning? Where am I? Am I still in California or is this Kansas? All right, this is Randy Kirk. You know that we got Nicholas Gibbs coming up later today. That'll be followed by Cern Basher, and both of those will be absolutely amazing. The economy's doing great. Tesla's doing great. Stock is up. You should be happy. I'm happy. All this is so good. Tesla is now almost up a full percent. 429.93. Okay, we need to close over 430 today. I don't know. Based on last night's activity, I think we could go to 440 today. It could happen. If we don't do it today, probably tomorrow. Real good chance we go to 440. I think we could have a I think we could have a really, really tough ceiling at 440. But that ceiling can be broken down quickly by some kind of a real breakthrough in Austin, something significant, and or by a continuation of these increases in the stock estimates and the earnings estimates by some of these analysts, like we saw this morning. If we get a lot of those increases over the next week, as we get close to the October 2nd date, I think that could be the thing that takes us through 440 even before we get to October 2nd. That's where I'm sitting right now. What do you think? Let me know in the comments below. It has been great talking to you.